Welcome back to Talk Tickers.
Hey, everyone.
It is Thursday, February 19th, 2026. And if you are listening to this right now, you're probably staring at your portfolio.
Unquestionably.
You're looking at a specific ticker symbol and asking yourself, what exactly just happened?
Right.
So we are here to answer that question. Today's deep dive is a full breakdown of the Q4 2025 earnings call for eBay.
Ticker symbol EBAY.
Exactly. That call took place yesterday afternoon. And let me tell you right off the top, if you haven't looked at eBay in, say, 5 years, you do not know this company anymore.
It is a completely different beast.
It really is. Now, this is Talk Tickers. This is the no-fluff earnings breakdown for the experienced investor. We don't do surface level.
We get into the weeds.
We go straight to the numbers, the strategy, and of course, the trade. So let's talk about the vibe check.
The vibe has definitely shifted.
Oh, massively. If you were watching the tape yesterday after the close, right around 4:05 p.m., you saw something pretty remarkable.
For a company that, honestly, many people had written off.
A legacy internet stock.
Yeah, a legacy stock. But you saw a vertical line. You saw a pop of 7 to 8% in extended trading immediately following the print.
7 to 8% for a mature marketplace. That is a massive move.
It's a repricing of risk.
Yes. For the last few years, the narrative around eBay has been very much about, managed decline.
Or steady value, at best.
Right. It was a dividend play. It was a buyback play, a melting ice cube that just happened to generate a ton of cash.
But yesterday felt different.
Yesterday felt like a momentum quarter.
It absolutely was a momentum quarter. And I think the market is pricing in a structural change here.
It's not just a beat.
No, this isn't just about beating estimates by a penny or two. This is about a fundamental shift in how the business operates and, crucially, how it's growing.
The sentiment has completely shifted from this is a cash cow that is slowly shrinking to this is a platform that is actually reaccelerating.
And that is a very powerful thing for a stock multiple. When you move from a value multiple to a growth-adjusted multiple, the repricing is violent. And that's exactly what we saw in the after hours.
Violence is the right word. And that repricing is what brings us to this deep dive today. We need to figure out for you, the listener, if this is a fake out or if this is the real deal.
Let's lay out the roadmap.
Good call. Here is what we are covering. We're going to blitz through the headline numbers first because you need the context.
You need to know the score.
Then we're going to get into the meat of it. The strategic growth engines.
Focus categories.
Yes, focus categories. And we are going to spend some real time on this new AI tech.
The magical listing tool.
The data on that is honestly wild. Then we have to talk about the elephant in the room, or I guess a teenager in the room.
The Depop acquisition.
$1.2 billion. Massive.
A fascinating strategic move. It signals a complete shift in their demographic targeting.
After that, we will hit the macro picture, the guidance, which completely shocked the street.
It's the mic drop.
We'll get to that. And then we'll wrap up with our standard disclaimer before hitting you with a speculative trade idea at the very end.
Sounds like a plan.
But let's not get ahead of ourselves. Let's look at the scoreboard. What did eBay print yesterday?
Well, it was a beat across the board.
Let's start with the top line.
Revenue came in at $2.965 billion. That is up 15% year over year.
Wow.
To put that in context, the consensus estimate was sitting right around $2.88 billion.
So they beat the street by roughly $85 million.
Give or take, yeah.
And 15% revenue growth for a company of this age. That is not a legacy growth rate.
Not at all.
That is growth stock territory.
Yeah.
If I told you a 30-year-old internet company grew revenue 15%, you'd assume they made a massive acquisition already.
Or pivoted the business model entirely.
Right. That number implies a vibrancy we just haven't seen in the top line for a decade.
It is significant, but look, revenue can be engineered.
Fair point.
You can raise fees, you can sell more ads. What I really look at is the gross merchandise volume, a GMV.
The lifeblood of the marketplace.
Exactly. It's the total dollar value of goods sold through the platform. And that hit $21.237 billion.
Okay, and the growth on that?
Up 10% on a reported basis, or 8% if you strip out currency fluctuations.
I want to pause on that GMV number. Because for a really long time, the bear case on eBay was that even if revenue went up...
Because of the ad rates?
Because they were raising fees or adding ads, right.
Yeah.
The actual volume of goods sold was stagnant. or even falling.
Yeah, the underlying volume was weak.
So hitting double-digit GMV growth, 10%, that feels like a massive psychological hurdle they just cleared.
It's the validation of the strategy. You can only engineer revenue growth through take rates for so long before you need the underlying volume to actually grow.
You need more stuff moving through the pipes.
You need more sneakers, more watches, more car parts exchanging hands, and now the volume is growing.
That tells me the ecosystem is healthy, not just the monetization engine.
Right, they aren't just squeezing the lemon harder, they are actually growing a bigger lemon.
I like that. What about the bottom line? Did this growth come at the expense of profitability?
Not at all. The bottom line was equally strong. Non-GAAP earnings per share delivered $1.41.
And consensus was what?
$1.31,
So they beat by a full dime.
a 7.6% beat.
That's huge.
Margins are holding up very well, too. Non-GAAP operating margins stood at 26.1%.
Strong.
And they are a cash machine. They generated $478 million in free cash flow just in the quarter.
Almost $500 million in free cash flow in 90 days.
That is the beauty of the marketplace model.
You don't own the inventory. You don't own the warehouses. You just sit in the middle and take a toll.
It's a capital-light compounding machine.
So they are profitable, they are growing, and they are beating expectations. But you and I both know that earnings calls are rarely just about what happened in the last 90 days.
It's always about what happens next.
The market is a forward-looking mechanism.
Yeah.
And the guidance for Q1 2026.
Yeah.
I mean, this was the mic drop moment for me.
This is what really moved the needle in the after-hours session.
Break it down for us.
You have to understand the context first. We are coming off the holiday quarter. Q4 is Christmas, Hanukkah, the massive shopping season.
Usually Q1 is the hangover.
Exactly. You expect a sequential decline. You expect management to be cautious about the consumer, especially with the macro headwinds in Europe that we'll talk about later.
So investors were bracing for a conservative guide.
Instead, management came out swinging.
What are the numbers?
They are projecting revenue for the first quarter of 2026 to be between $3.00 and $3.05 billion.
Crossing the $3 billion mark.
Which implies an FX-neutral growth rate of 13 to 15%.
That is incredible. And the GMV?
For GMV, they are forecasting 21.5 to 21.9 billion. That implies 10 to 12% growth.
Wait, hold on. So they are guiding for acceleration.
Precisely. They are guiding for acceleration into early 2026.
The market was bracing for caution, for a slowdown.
And eBay gave them absolute confidence. They are saying that the momentum they built in Q4 isn't a fluke, it is a trend.
That is why the stock popped. They're basically telling us we are going to sell even more stuff in February and March than we thought possible.
Yes.
Okay, let's unpack this. Because you don't get double-digit growth on a platform this size by accident.
No, you don't.
You don't just hope people sell more PEZ dispensers. This is the result of a very specific strategy they've been running called focus categories.
Right.
We've talked about this before on the show, but it seems like it's finally paying off at scale.
It is. The core pillar here is that eBay stopped trying to be the everything store. They realized a few years ago that they cannot win on commodity goods against Amazon.
You don't go to eBay to buy a generic USB cable or toilet paper anymore.
Amazon won that war. So
Yeah.
eBay doubled down on high-value verticals where trust, authenticity, and community actually matter.
And the data shows it works. Focus categories grew GMV by over 12% in 2025.
That is outpacing the rest of the business significantly.
Let's dig into the specific categories, because there's some nuance here that is really interesting to me. Collectibles and trading cards. That's been the poster child for this strategy.
Definitely.
But looking at the transcript, it wasn't a straight lineup for everything in that bucket, was it?
No, and this is where the detail really matters. Pokemon cards actually decelerated.
Which sounds bad on the surface.
It sounds bad, but you have to remember, they were comping against triple-digit growth during the absolute mania of the last couple of years.
Oh, right, the pandemic boom.
Mhm.
Everyone and their grandmother was buying Charizards.
It was a bubble, so a cool down there was expected. But that deceleration was completely offset by an acceleration in sports cards.
Sports cards are booming right now. We are seeing record sales for rookie cards, modern cards. It seems like the liquidity just moved from Pikachu to LeBron.
Exactly. The money stayed in the eBay ecosystem.
Mhm.
It just shifted focus.
That's the power of the broad platform.
But there was another surprise in the collectibles bucket that I found really fascinating.
The bullion.
Yes, the bullion surprise. There was a significant acceleration in the sales of gold and silver coins and bullion.
This is directly tied to the macro environment, right?
100%. When people get nervous about the economy or when they see sticky inflation or geopolitical instability, they flock to hard assets.
And interestingly, a lot of that trade is happening right on eBay.
It's the flight to safety trade happening in real time on an auction site.
It's not just people buying ETFs on their brokerage app. They want the physical coin. They want the Krugerrand in their actual hand.
And eBay is capturing that volume. It really shows how the platform acts as a barometer for global sentiment.
An index of anxiety.
It's a great way to put it. When anxiety goes up, bullion sales on eBay go up.
And they aren't just riding the wave. They are building tech to support the collectibles market.
The new AI-powered card scanning tool.
Yes. I looked into this tool. It is pretty wild.
I think it's a perfect example of how they are using tech to remove friction in these specific verticals.
Anyone who has sold cards knows the pain. You sit there typing in, 2024 Panini Prism Blue Hollow Refractor, whatever. It takes forever.
No, you just take a photo.
And the AI just recognizes it. It checks a database of 40 million samples, identifies the exact card, finds the parallel, and prices it instantly.
The adoption has been immediate. Management said 15 million cards have been scanned since the beta launched in November.
15 million.
That is 15 million items that were cataloged and potentially listed with a fraction of the effort it used to take.
That is how you unlock supply. You make it easy for the guy with the shoebox in his closet to actually monetize it.
Moving from cards to cars.
Yes, motors. Specifically parts and accessories, or P&A. This has always been a sleeper giant for eBay.
It's a massive business. It's one of their most profitable segments.
And the thesis here is repair over replace.
We have seen the data on the average age of vehicles on the road. It just keeps hitting record highs.
People are keeping their cars longer, either because new cars are way too expensive or interest rates on auto loans are just punishing.
When you have a 12-year-old car, things break. You need parts.
And buying car parts online used to be a nightmare.
Oh, absolutely.
You buy a starter motor, you wait a week, it arrives, and it doesn't fit your 2018 Honda Civic. You're furious. The mechanic is mad because the bay is tied up. It's a disaster.
It destroys trust, which is why their tech investment here is so critical. They call it automated fitment.
How's that work?
They are using proprietary data to guarantee that a part fits a specific vehicle. If they say it fits, it fits.
And if it doesn't?
They cover it. This reduces the return rate, which is the absolute killer in e-commerce.
Returns crush margins.
And it builds trust. It turns a risky transaction into a safe one.
It effectively de-risks the mechanic work for the DIY crowd.
Mm-hmm.
If I know eBay guarantees the fit, I'm much more likely to click buy there than go to the expensive local dealer.
Exactly. And that stickiness is what drives the recurring revenue in motors. Once you trust them for the brake pads, you come back for the alternator.
Makes total sense.
Yeah.
Okay, let's talk about the third big pillar, fashion and luxury.
A powerhouse segment.
They said this generated over $10 billion in GMV in 2025.
10 billion.
That is not a small boutique. That is a massive retailer.
And the key driver here is the pre-loved trend. Recommerce, or secondhand sales, made up over 40% of their total GMV.
Think about that. Nearly half of everything sold on eBay is used.
It's incredible. And it's interesting how the branding has changed.
It used to just be called used. Now it's pre-loved.
It implies a story. It implies value.
And for the younger generation, it implies sustainability.
Yeah.
Which brings us perfectly to the biggest news of the quarter.
The acquisition.
eBay is buying Depop for $1.2 billion in cash.
This is a strategic power move.
For those who don't know, Depop is a marketplace that was owned by Etsy. It is incredibly social forward. It's mobile first.
And it is the dominant platform for Gen Z fashion.
This is where the cool kids are.
Unquestionably.
I have to be honest. I feel old when I look at Depop. It looks like Instagram or TikTok. It doesn't look like a store.
It's all aesthetics and vibes.
It's chaotic in a way that eBay isn't.
That is exactly the point. eBay has a demographic problem. We all know it.
It skews much older.
It's where your dad goes to buy golf clubs or vintage stereos. It's functional. It's reliable.
But it isn't cool.
Depop's user base is 90% under the age of 34. This is the youth on-ramp that eBay has been desperate for.
So they are buying an audience that they simply could not build organically.
It's the classic buy versus build. They could spend 10 years trying to make eBay cool to a 19-year-old and probably fail fast.
You can't force cool. Kids smell it a mile away.
Or they can just write a check for $1.2 billion and own the platform where the 19-year-olds already are hanging out.
Right. And the synergies are real here. Depop is cool, but its back-end infrastructure is, well, it's developing.
Logistics are hard. Fraud prevention is hard. Cross-border payments are really hard.
And eBay is the best in the world at that stuff. They have spent 30 years building the plumbing of global commerce.
If they can plug Depop into its global scale, its authenticity guarantee, its cross-border shipping network, its payment processing, they can make Depop much more efficient and profitable than Etsy ever could.
Management said they expect this to be accretive by 2028, and it's going to add 1 to 2 percentage points to the 2026 GMV growth.
So they are buying growth, but they are also buying a future customer base. It secures the funnel.
I love that idea. The life cycle of the collector.
You get them on Depop when they are 20 selling vintage tees.
Right?
You migrate them to eBay Motors when they're 28 and fixing up their first car.
And you get them into eBay luxury watches when they get their big promotion at 35.
Without Depop, that funnel was broken at the entry point.
It makes so much sense when you frame it like that. Okay, we touched on the card scanner, but we really need to go deeper into the AI strategy.
Yes, the AI.
Because usually when companies talk about AI on earnings calls, I just roll my eyes.
It's buzzword bingo.
Exactly. We are leveraging AI to synergize our paradigms and optimize synergies.
It means nothing.
But eBay is deploying something called magical listing. And the numbers they shared are actually tangible.
They are. And the shift they described is very important. They are moving from generative AI, which is just helping you write a nice description, to agentic AI.
Agentic, meaning the AI has agency. It does the work for you.
Correct. The functionality they described is this. A seller takes a photo. That's it.
Just one photo.
The AI agent looks at the photo, builds the title, selects the correct category, fills in the item specifics, which is the most tedious part.
The drop-down menu.
Exactly. And it even recommends the pricing based on sold history.
So it takes the listing process from 5 minutes of typing and research down to 30 seconds of snapping a photo.
And the stats completely back that up. They reported a 25% decrease in listing time.
That's nice, but
But more importantly, they saw a greater than 50% increase in new listing creation.
50% increase. That is the metric that matters.
It is, because what is the single biggest barrier to supply on eBay? It's not that people don't have stuff. We all have stuff.
It's friction. It's laziness.
It's, I don't want to spend my Sunday afternoon typing in model numbers and measuring things.
Right. If you remove that friction, you unlock what they call the closet inventory of regular people.
It's the death pile in the reseller world.
Everyone has one. The pile of stuff you bought or want to sell but haven't listed because it's just a hassle.
If the AI kills the death pile, inventory explodes.
And customer satisfaction is at 95% for the tool. So it's actually working.
It's not hallucinating and calling a shoe a toaster. It's getting it right.
This is honestly one of the most practical applications of computer vision I've seen in e-commerce.
They also mentioned agentic search. This is currently rolling out to mobile. This is the natural language stuff.
How does that look in practice?
Instead of searching, leather jacket, size M vintage, you type, find me a vintage leather jacket that looks like the one Brad Pitt wore in Fight Club.
Oh, that's cool.
And the AI understands the context, the style, the visual references, and serves up results. It changes search from keyword matching to intent matching.
It makes the platform so much stickier. It feels like a personal shopper.
It solves the discovery problem.
Sometimes you don't know the exact brand name of what you want. You just know the vibe.
And for a marketplace of unique items, vibe search is actually incredibly powerful.
Okay, we have been very bullish so far.
We have.
And rightfully so, given the stock move and the numbers.
Yeah.
But we are talk tickers. And we need to look at the whole picture. There were headwinds.
It wasn't all sunshine and rainbows.
What are the risks that you need to watch as an investor?
The biggest drag right now is international, specifically the UK and Germany.
Those are massive markets for eBay.
They are, and they are soft.
How soft?
Well, international GMV actually declined slightly, about 1% on an organic basis.
Oh, wow.
It was masked by the strength in the US. The European consumer is under serious pressure.
High energy costs, general macro malaise.
They just aren't spending like the American consumer is right now.
So the US is basically carrying the team.
Yes. And that is a risk. If the U.S. consumer sneezes, the whole company catches a cold. You really want to see that international engine fire up again.
And there is a regulatory piece here, too, regarding cross-border trade.
The de minimis exemption.
Right. Explain that for us.
This is a bit technical, but it's crucial.
Why?
For a long time, there was a loophole where cheap goods coming into the U.S., mostly from China, didn't face tariffs or strict customs checks if they were under a certain dollar value. Usually $800.
The U.S. government has been closing that loophole.
Exactly.
Now, this targets things like Shein and Temu.
Right. Mostly, yes. But eBay gets caught in the crossfire.
Because there's a lot of cross-border trade on eBay.
It creates friction. Suddenly, packages are getting held up at customs or prices go up because of duties.
eBay claims they are managing this with their SpeedPack logistics solution,
Right.
which pre-clears customs.
But it is a headwind. It just makes cheap cross-border goods less attractive.
So if you are an investor, you are watching the European macro data very closely, and you are watching trade policy.
Keep a close eye on both.
But even with those headwinds, the capital allocation story is incredibly strong. They were returning a lot of cash to shareholders.
They are a cannon of cash returns. In Q4 alone, they returned $756 million to shareholders.
Huge.
And looking ahead to 2026, the board authorized an additional $2 billion for buybacks.
And they are targeting $2 billion in repurchases for the full year 2026. And this is the key part for me. They are doing that despite spending $1.2 billion in cash to buy Depop.
That shows the immense confidence in their balance sheet.
They could do a major strategic acquisition and still buy back 4 to 5% of the company in a single year.
That is a massive flex.
Plus, they raised the dividend to 31 cents per share, up from 29 cents.
So you were getting growth, you were getting buybacks, and you were getting an increasing yield.
It's a total return package.
It's what makes the stock attractive to both growth investors and income investors. That overlap is a sweet spot for the multiple.
There was one little accounting note for the detail-oriented listeners out there, something about software expenses.
Yes. Starting January 1st, 2026, they are changing how they account for software development costs. They are moving to expense them rather than capitalize them.
Translate that for us. What does it actually mean?
It changes the look of the P&L. It might make earnings look slightly lower on paper because you are taking the hit immediately rather than spreading it out over several years.
Oh.
But, and this is vital, it does not change the cash flow. The cash out the door is exactly the same.
It's just an accounting treatment.
Just an accounting treatment. But don't be surprised if some automated screening tools show a little blip in margins because of this change.
Good catch. Good to know. Okay, so summarizing everything, we have a beat and raise.
Check.
We have a very clear strategy with focus categories that is delivering. We have a bold M&A move with Depop to secure Gen Z.
We have AI that is actually shipping and working.
And we have a highly shareholder-friendly capital return policy.
It is a very robust package. It's honestly hard to poke holes in it right now.
Which brings us to my favorite part of the show.
Hear you.
We have looked at the data, we have heard from management, and now we are going to get a little creative. This is the part of the show where we pitch a trade idea that is based on the facts, but takes a bit of a leap of logic.
It's a hedge fund pitch.
Exactly. And please, listener, say it with me right now. This is not financial advice.
Not financial advice.
This is for entertainment and educational purposes only. Do your own diligence. Do not trade based on what two voices on a deep dive tell you to do.
But if you did, what would you be looking at?
Okay, here is the pitch. I call this trade the hard times hedge, or alternatively, the attic arbitrage.
I'm listening. Walk me through the arbitrage.
The thesis is this. The economy is getting weird. We have this bifurcation. People in Europe are broke. People in the U.S. are feeling the pinch of inflation, so they're keeping their cars longer.
Right.
And what are they doing to make ends meet? They are selling their stuff.
Okay, that tracks.
Jamie Iannone, the CEO, dropped a stat on the call. He said the average household has $4,000 worth of items lying around that could be sold on eBay.
$4,000. That's a lot of liquidity sitting in closets.
Exactly. And now, Magical Listing makes it effortless to extract that liquidity. You don't have to work for it.
You snap a photo, the AI does the rest.
So we are moving from an era of accumulation, where we buy stuff and shove it in a storage unit, to an era of circulation.
So what is the trade then?
The trade is this. Long eBay. Short self-storage REITs.
Oh, that is spicy. Short the storage units.
Think about it. Why do you pay for a storage unit? Because you have too much stuff and you don't want to deal with getting rid of it.
It's a tax on procrastination.
It's a tax on, I'll deal with this later.
That's true.
But if eBay's AI removes the procrastination friction and the economy creates the financial incentive to sell, people are going to empty those storage units.
They're going to list that old guitar, those boxes of comics, that vintage jacket.
And they're going to stop paying the $200 a month rent to Public Storage and instead pocket the $500 from the sale.
And the Depop acquisition captures the younger generation doing the exact same thing with their wardrobes.
Exactly. Depop is the wardrobe churn. eBay is the garage churn. And the bullion sales, That's the flight to hard assets,
You sell your old junk, which is depreciating.
to buy gold coins, which you hope appreciate. And where do you buy the gold? On eBay.
So you are monetizing the American hoard.
I am monetizing the liquidation of the American hoard. As people sell that $4,000 of household items to pay bills or buy gold, storage unit vacancy rises and eBay GMV flies.
It's the perfect macro hedge for a stagnation economy.
It is outrageous, but you have to admit, the logic holds together.
If the friction of selling hits zero, the cost of storage looks much, much higher. Why pay to store a depreciating asset when you can instantly convert it to cash?
Exactly. Why am I paying $200 a month to store this when I could click a button and get $500 for it? That is the question eBay is answering.
It's a compelling narrative, and the numbers from this quarter, the acceleration in C2C or consumer-to-consumer sales, actually back up the idea that regular people are coming back to the platform to sell.
There you go. The attic arbitrage. You heard it here first.
I like it, but bringing it back to reality for a second.
Well, you do.
The takeaway from this earnings call is extremely clear. eBay posted a massive beat and raise. Growth is accelerating to double digits.
They secure the youth demographic with Depop.
And the AI is not vaporware. It is demonstrably increasing supply.
The market reaction suggests that investors finally believe the turnaround is real. This isn't a managed decline anymore.
It's a re-commerce compounder.
And that is a very different valuation proposition.
Absolutely.
Well, that wraps up our deep dive into eBay's Q4 2025 earnings. A fascinating quarter for a company that just keeps reinventing itself. We will be watching very closely to see if that Q1 guidance holds up. Until next time, keep your eyes on the tape.
Thanks for listening.